You ever notice how the best opportunities in crypto always show up at the exact moment everyone feels the most terrified? That's where Hedera is right now. Price hanging by a thread, DeFi exploding behind the scenes, and everyday investors, people like you, are stuck asking the one question nobody wants to say out loud. Am I about to miss something big or get wrecked? Here's the truth, most won't tell you. What happens next could either save your portfolio or bury it. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Hedera is standing on a cliff edge, and let me be blunt with you. The next move will decide who becomes the early winner and who becomes the tragic "I sold too early" story people love dragging out on Reddit. Right now, HBAR is doing that thing every investor hates, sitting perfectly still, tapping its foot at a critical support level like it's waiting for someone brave enough to act. 12 cents. That's the line, the lifeline, the same level HBAR has clung to all year while the entire market flips between euphoria and panic like a toddler overdosing on sugar. And here's the uncomfortable truth. If HBAR loses this level, things will get uglier before they get pretty again. Not catastrophic. It's not the end of the ecosystem, but you'll hear the same people who bought the top start screaming "dead project" again like clockwork. Meanwhile, the ones who understand cycles, the ones who don't get emotional at red candles, will be quietly accumulating. Because whether we like it or not, this isn't an HBAR cycle. This is still a Bitcoin-driven market. And Bitcoin is acting like that one friend who can't decide where he wants to eat, but refuses to let anybody else make the decision either. Until Bitcoin stabilizes, altcoins, including HBAR, move only when the king allows it. But that is the short-term story, and honestly, the short-term story isn't the reason people end up winning long-term. The real story is what's happening behind the scenes, the stuff retail never pays attention to until it's way too late. Over the past 3 years, tokenization has gone from a cute buzzword to a financial arms race, and Hedera is suddenly stepping into the spotlight like it was preparing for this moment the entire time. You've probably heard whispers, but today those whispers turned into alarms. Sonics and Magnus just launched one of the biggest real-world asset tokenization moves on Hedera, an institutional-grade oil and gas fund, fully tokenized, fully compliant, and fully live. Read that again. Oil and gas. The same industry that practically prints money in its sleep is now piping its financial infrastructure through Hedera's rails. And this isn't a concept, a pilot, or a hypothetical roadmap. This is real capital entering a real market using Hedera as the settlement layer because enterprise-level transparency, compliance, and throughput actually matter when billions are involved. Now think about what that means. For decades, access to institutional petroleum assets was locked behind private equity doors, impossible for the average investor to touch. But tokenization doesn't care about gatekeepers. That door is cracking open. And Hedera, carbon negative, high throughput, enterprise secure, is powering the entire transition. And this is just the first domino. Because while the market panics over price, Hedera is quietly stacking accomplishments. Dev activity exploding, treasuries building, institutions lining up, RWAs multiplying, DeFi expanding at record speed. But here's the wildest part. Retail still hasn't connected the dots. They are staring at the chart while institutional players are staring at the opportunity. And before I go deeper, before we connect everything happening right now to what's coming next, I need to say something directly to my long-term viewers, because this is bigger than a single video. If you want deeper breakdowns, exclusive alerts before the news hits YouTube, and real-time signals on these upgrades, join our YouTube membership. Not only does it support the channel, it helps you stay ahead of the herd. If leveling up your financial decisions is a priority, not a wish, then become a member today. Now let's get back to the big picture. The biggest catalyst right now isn't just tokenization, it's the DeFi infrastructure finally growing teeth. Axelar integrating with Hedera means the network is no longer isolated. It is now plugged into 60 plus blockchains, opening a floodgate of cross-chain liquidity. Meanwhile, SaucerSwap, the backbone of Hedera DeFi, just dropped its iOS wallet, audited, polished, self-custodial, and ready to push DeFi directly into mobile adoption. Not Web3, not a browser extension, mobile. The same tool 5 billion people use every day. And if you think that won't change the game, you're forgetting the lesson every crypto cycle teaches. Mass adoption never starts with complicated tech, it starts with convenience. Hedera is building convenience at a time when its price looks boring, but boring is where wealth is accumulated. Explosive is where wealth is revealed. The truth? Hedera's ecosystem is expanding faster than retail can keep up, and by the time the price reflects that, the easy seats will be gone. Here's where most investors get played, and they don't even realize it. They stare at HBAR's price like it's supposed to move just because they want it to, while completely missing the structural changes happening right under their nose. Because what's unfolding right now in Hedera's DeFi ecosystem is the kind of shift that normally only gets recognized after the explosion. But by then, the opportunity is already gone. And let's start with the obvious. Hedera DeFi is no longer in the potential phase. It's in the execution phase, and you can see it in the numbers. DEX volume on Hedera has been surging, not in hype cycles, not from random pumps, but because actual users are actually using the chain. Last month alone, volume nearly matched the highest volume ever recorded on the network. And here's the kicker. This happened while the market was down. When most ecosystems slow to a crawl during red seasons, Hedera's activity spikes. That tells you something very simple but extremely powerful. HBAR's ecosystem grows even when its price doesn't. That's not normal for altcoins. Most altcoins behave like emotional influences, loud when they pump, silent when they dump. Hedera behaves like an enterprise product. Steady, consistent, growing, even when nobody is watching. But DeFi volume is just one layer of the story. The next layer is interoperability, because if a blockchain can't talk to anything else, it's functionally useless. That's why Axelar integrating with Hedera is such a seismic shift. Hedera just got plugged into the bloodstream of crypto. It can now exchange assets and liquidity with over 60 interconnected blockchains. Ethereum, connected. Solana, connected. Arbitrum, Avalanche, Cosmos, XRP Ledger, all connected. What does that mean in human language? It means developers can actually build multi-chain applications on Hedera without needing 20 different tools. It means liquidity can finally flow into the network instead of getting stuck behind technical walls. It means retail can move assets between ecosystems with a few clicks instead of a weekend-long tutorial. And it means Hedera is no longer a closed enterprise chain. It is now a hub, not a passenger. And we haven't even touched the part that will impact users the most. DeFi on your phone. Saucer Swap, the largest DEX on Hedera, just launched its iOS wallet. Not a beta, not a coming soon announcement, a polished, audited, fully self-custodial wallet that runs like a Web 2 app with 0 interface fees, staking and unstaking, real-time portfolio tracking, 5 native HTS support, Space ID protection, full quant stamp audit, and it's being released to the public through test flight because Apple is still dragging its feet. Not because the app is unfinished, but because the system is slow. This changes everything because adoption doesn't happen through white papers. It happens through simplicity. When people can trade, stake, bridge, and manage assets directly from their phone without fumbling through browser extensions, adoption goes vertical. This app gives Hedera what most chains still don't have, a doorway for the average person, but we're still climbing. Because next up in the DeFi wave is Silk Swap launching on Hedera, Bonzo Finance releasing Bonzo Vaults, and yet another DEX arriving through Lambda. It's multiple DeFi platforms launching simultaneously during a bearish market. That almost never happens. Developers retreat during bad markets. But on Hedera, they're launching, they're building, they're expanding. And you know why? Because builders don't follow hype. They follow infrastructure. They follow networks where they can deploy safely, scale massively, and attract real-world value. That's Hedera. And the results are already visible. DEX volume surging, multi-chain interoperability activated. Institutional grade tokenization expanding, global DeFi finally arriving, ecosystem protocols multiplying. Exactly the kind of environment that historically precedes massive price reversals. But before you get too comfortable, let me keep the honesty sharp. Price-wise, Hedera is not out of the woods. Losing the 12-cent support opens the door to 10 cents, maybe 8 cents. That's reality, not FUD, just math and market structure. But here's the paradox retail never understands. The best fundamentals usually emerge at the ugliest parts of the chart. Right now, HBAR looks weak only if you ignore everything happening underneath, but if you pay attention, it looks like a coiled spring. And the moment the market stops bleeding, the moment Bitcoin catches even a little bit of a bid, the network that has been quietly expanding during the downturn becomes the network that explodes during the recovery. You're watching the groundwork for that explosion being laid in real time, and it's happening faster than anyone expected. Now let's put all the noise aside and look at what actually matters, the bigger picture. Because while everyone is panicking over candles, Hedera is quietly rewriting its future behind the scenes. And when you zoom out far enough, something becomes painfully obvious. This ecosystem is not behaving like a typical altcoin. It's behaving like an emerging infrastructure layer, the kind institutions build on long before retail understands what's happening. Start with tokenization, because this is the real gold rush, and Hedera is showing up with the biggest shovel. We just watched one of the most significant real-world asset upgrades go live: institutional-grade petroleum finance through Sonex and Magnus. This is not a white paper. This is not a startup begging for attention. This is real, regulatory-compliant, audited institutional capital issuing regulated security tokens directly on Hedera. And the reason they chose Hedera is the same reason every serious enterprise is quietly migrating. Instant settlement, built-in compliance rails, carbon negative operations, near null fees, immutable audit trails. This isn't hype, it's architecture. This is the stuff future financial rails require as a baseline. But the part everyone overlooks, these tokenized assets aren't sitting still. They create demand, real demand for HBAR. Every transaction, every movement, every settlement, every lifecycle event on these tokenized instruments must be powered by the network. Not Solana, not Ethereum, not Avalanche, it's Hedera. And now that Magnus has unlocked energy finance on-chain, expect others to follow. Because when one major player breaks the door open, the rest suddenly realize the hallway was always there, but tokenization is just one pillar. The next pillar is Hedera's DeFi expansion, because whether people like it or not, DeFi remains the beating heart of crypto liquidity. And right now, Hedera's DeFi ecosystem is entering its real adolescence. Mobile wallets, cross-chain connectivity, multiple new DEXs launching, a surge in retail usable tools. This is the exact pattern every major chain has gone through before its explosive growth phase. Ethereum had this moment in 2020, Solana had it in 2021, Avalanche had it during the liquidity rush. Hedera is setting the table for the same outcome, but with better tech and stronger partner. Which brings us to the next pillar, enterprise expansion. Because if there's one thing Hedera has that almost no other chain can match, it's credibility. Google, IBM, Boeing, LG, Ubisoft, Standard Bank, Dell, Deutsche Telekom, these are not speculative token projects. These are established corporations with billions in capital who've chosen Hedera as the settlement layer they trust. And now, Hedera is expanding this model further with strategic and community partners. More entry points, more builders, more adoption funnels. And while everyone else is distracted trying to pump the next meme coin, Hedera is building the kind of ecosystem institutions cannot ignore. And speaking of institutions, here's the biggest shift happening right now that almost nobody is accounting for. HBAR ETFs will fundamentally change this asset forever. The moment an asset becomes ETF eligible, it stops behaving like a community token and starts behaving like an investment product. We've already watched the Canary ETF accumulate over 421 million HBAR. Now add the projections for future ETFs. Add the demand from institutions who cannot hold raw crypto. Add the regulatory green lights that have already opened the door. And then consider the ultimate reality. Every ETF that launches must buy HBAR from the circulating supply. But HBAR's circulating supply is finite. And as tokenization grows, and DeFi grows, and staking grows, and institutional accumulation grows, circulating supply shrinks. A shrinking liquid supply plus inflows from ETFs plus inflows from tokenized RWAs equals the textbook definition of a supply squeeze. Not a meme, not hype, a real economic event. And here's why this matters. Retail is emotional, institutions are mechanical. Retail sells on fear, institutions buy on flows. Retail watches price candles, institutions watch liquidity availability. And right now, liquidity is tightening quietly, steadily, predictably, which brings us to the last and most important pillar, market structure. Yes, price is weak. Yes, sentiment is down. Yes, bearish narratives dominate, but zoom out. Look at the expansion of the ecosystem. Look at the integrations. Look at the enterprise adoption. Look at the ETF inflows. Look at the upcoming catalyst. Price action is simply lagging behind fundamentals, the same way it lagged before every previous HBAR breakout. The difference now, everything is bigger, everything is deeper, everything is more interconnected. And when the next major uptrend begins, whether it's triggered by Bitcoin, ETFs, or institutional entry, Hedera is positioned not as a speculative bet, but as a fully operational, enterprise-ready network with a real economy behind it. That's why the smartest people don't care what HBAR is doing today. They care what its ecosystem is doing every day, because price fluctuates, fundamentals compound. And Hedera's fundamentals have never been stronger. So here's the final question, the only question that matters. Are you positioned for when the market finally catches up to the reality Hedera is building? Because when it does, you're not going to get a warning. You're just going to wake up one day and realize HBAR didn't pump. It simply became what it was always meant to be.